Okay, let's do a quick rundown of the Phoenix, Arizona metro real estate market. But first, let's do some video. I've been lucky enough to be on channel 3 times in the last few months. Here's it, the one from May.
It's ahead. Fountain Hills, Glendale, Goodyear. We asked real estate analysts.
I'll put a link to them in the bottom so if you want to watch them. Here's another one. This is from July 1st.
And I think they're flattening out right now.
Real estate analyst John Wake tells us the number of homes going on the market is slowly creeping up. And
then here's the one that I did this week.
No one I know predicted that would happen a year ago, that it would go up like that. It's crazy. The valleys.
Okay, so that was fun. Really nerve-wracking to do, but a lot of fun too. So let's get back to the data. Last week I updated this chart, and if you could scroll down to the second one, which includes new listings, it also has the added feature that if you scroll over, you can get information on the exact numbers involved and the way they were a year ago and 2 years earlier. So that's super useful. But what I wanted to talk about today was this one, the one that I just updated. And you can see the number of homes for sale is increasing, but it's slowing down. It's not going up as fast as it is going up, but it's not going up as fast as it was. And you can see if we go scroll down, and this compares it to what it was 2 years ago. And it was going up faster, but it's not going up as fast anymore. Nevertheless, the number of new listings hitting the market is still high. So that's good. But the number of sales are kind of similar to where they were in 2019. What's going on here is the under contract is going up. Well, something we have seen is that the number of iBuyers like Open Door are buying a lot more homes. They made a ton of money in the first few months this year because they would buy the house, and when they sold it 2 months later, it had gone up, $30,000 in value. Also, if you scroll down, this shows you the price. Here we are. This was at $230. Let me talk about that in that last Channel 3 interview. You can see the prices were going up, $10,000 or $15,000 a month, and then between June and July, they only went up $5,000. And it's looking like, and there's a couple of people estimating that the prices between July and August are going to be more or less flat. So that boom market is over. But that's really common that in this is 2020, that's a crazy year, but in most years, prices will go up in the first half of the year and then level off. Okay, here's a publication called STAT. It's from the Arizona Regional Multiple Listing Service. The guy who makes it is really great. Lots of data here. Let me just give you some analysis. And he says here, a slight increase is forecast in August for the average sales prices, while a slight decrease is forecasted for the median sales price. So it looks like prices are going to be pretty flat between July and August, depending on how you look at it. And then there's a lot of information here. I'll make a link to this, and also could make a link to a version which has these highlights of mine. He's saying this market has been about, I respect him tremendously, but this market has been about demand. It's been about supply. I disagree. I think it's been both, but it's a lot more demand than supply. A lot of people, I think, confuse the number of sales to demand. Like if the sales are the same, then they think demand is the same. But if the sales are the same but prices are higher, that means demand is higher. That's why they're selling the same number of homes at higher prices. Okay, let me scroll down here. There's a lot of great stuff in here. But this is one I wanted to mark where he says that Maricopa County saw a 2.11% gain in population. He's looking at census data. It's on 8.3% growth in total housing units. Yeah, but when you look at total occupied housing units went up 13.6% over those 10 years. So actually the occupied housing units went up more than the population. So it's another reason I would say it's not all supply. The general consensus in the real estate industry is it's always supply's problem. And here's a chart of iBuyers. You can see iBuyers are increasing a lot the last couple of months, which is wild. And that's just could explain why things aren't happening as I expected, because we have so many iBuyers coming. I didn't expect that. And lastly, he says July's reported median was 405,000. Looking ahead to August, the ARMLS pending price index is projecting a median price of 400. They're actually projecting a slightly lower price in August. Let's see what else. Oh, also, if you ever want to subscribe to my Twitter channel, here's some interesting things I put together on Twitter. Hopefully they're interesting. According to the crime report, over half of single-family sales closed in the last 30 days in Greater Phoenix sold for more than list price, more than half. But it also shows that the median price in August is about the same as in July. What? So I'm thinking, what's going on there? Are people intentionally pricing houses a little lower to make kind of a slow motion auction to get multiple offers? Here's another Twitter thing I did today. Maricopa County, single-family detached homes. This is showing homes that sold. There's normal sales, but not through the MLS. The number of homes being sold not through the MLS went up 33%. Well, the number of sales, this is looking at July 2019, July 2021. But the MLS sales actually went down a little bit. So there has been a shift. One, there's been a shift for people selling their homes not in the MLS, which we're seeing here, this 33%. There's also people, when they do put them in the MLS, that the listing agent is first promoting it to their clientele, and then to their other real estate agents within the same brokerage. And so when they put it in the market, it hits the same time they put it in the market as for sale. They also say it's sold. It's called 0 days. So 0 days has gone up. It's not gone up huge, maybe it up 3 percentage points. But nevertheless, that does help. That does limit supply. Those homes weren't available to everybody. So when you come in and look at the homes for sale, there's a 3% lower just because of that. And then when you add in the number of investors coming in that are pulling supply out, then you're getting to a significant amount of homes that are being that are not for sale. Here's another final one. Then I'll get out of this rambling here. Just looking at July from 2014, the average percentage of single-family detached homes in Maricopa that were by investors was 9.9%. In July, it was 16.8%. Just what we don't need. And then I've talked elsewhere about the incredible number of tax breaks they give real estate investors. Basically, the government is giving money to investors. And they say, okay, well, then I'll buy. Well, they end up buying a lot more than they would otherwise without those tax breaks. And iBuyers, here's the same thing for iBuyers. They went from 2% to almost 6%. So when you add those together, that's another reason that the market is getting strained, is there's all these investor types